It was formed in 2004, 17 years ago, and is the recognized face of the NBFC sector. We have been engaged in a regular interaction with all the regulators, Government of India, Reserve Bank of India, including pre-budget meetings and pre-policy meetings, and all the proactive measures which have been announced by the government. We have been part of it. All the big NBFCs, medium NBFCs, and small NBFCs are the members who are into asset and loan financing. Our mission is to ensure sustainable growth of asset and loan financing NBFCs in India. Our vision is to contribute to the development of a non-banking financial sector by promoting self-regulation, compliance, and governance standards among our members, and to act as a bridge between lending NBFCs and the regulators. Our objective is to ensure disciplined growth and healthy growth of the NBFCs. We conduct our business through board of directors. The prominent among them are present here today, and the governing council members. We have various expert committees, representation committee, legal committee, CFO committee, and professional development committee. We have advisory council members from the regulators. We have affiliated associations all over India. In fact, we are present in more than 15 cities and towns in India. We have a quarterly newsletter, very active website, and we are present very hyperactive on all our social media handles, Twitter, Facebook, LinkedIn, and Instagram. In fact, all our representations and issues have been downloaded in our website right from beginning. From 12 years history, you can see on www.fidcindia.org.in. I once again welcome you all, and hope that this meeting goes very well for all of us and see the right perspective for NBFCs. I will hand over the mic to our chairman, Mr. Ramesh Iyer. Before that, I'll introduce all our members who are present here. Mr. Ramesh Iyer, Chairman FIDC, and of course the MD, Vice Chairman of Mahindra Finance. T.T. Srinivas Raghavan, who is the MD of Sundaram Finance Limited. Mr. Umesh Revankar, MD of Shriram Transport Finance Company Limited. Sanjay Chamaria, MD of Magma FinCorp. Mr. Raman Agarwal, Independent Director, Paisalo Digital Limited. Mr. K.V. Srinivasan, who is the Director and CEO of Profectus Capital, and Mr. V.P. Nandakumar from Mannapuram Finance Limited, a golden company from Kerala. So I welcome our directors also, welcome press media, and hope that this meeting goes very well for all of us. Thank you.
Thank you, Mahesh. Welcome to the media friends. Thank you for joining this meet. Let me just lay out the purpose of this meet. You have been reaching out to each one of us in different forums and have been wanting to understand what is happening in the NBFC sector, how are we positioned in terms of our capital and liquidity, what's happening on the business front and growth, how are the regulatory challenges. So various questions have been posed to us at different points of time by the media and different forums. So we thought it prudent that as FIDC, all of us can come together and share with you our collective thought as FIDC on where we see the overall industry really going from here. At the outset, I would like to kind of express that NBFC has always been a very, very important player in the overall economic growth, and we continue to see ourselves to be. And unlike everyone thought over a period of time with the pandemic situation, will there be a huge challenge for NBFC going forward? What is the real future of NBFCs were the questions that were getting asked and addressed. And I want to confirm to you that we believe that it is a phenomenal opportunity is what we as NBFC see going forward for surely. The sentiments have turned positive. We do see growth coming back, and we are seeing our consumers getting back to normalcy. Yes, definitely not, maybe not full extent like pre-COVID, but definitely the direction is very, very positive. And month over month, we have seen that change happen for sure. Capital and liquidity, which was a pressure point of discussion for all of us. All of the NBFCs, I would believe, are adequately capitalized and even are out of the liquidity pressure. We've all been able to sufficiently raise funds from the market through different instruments. While there may be still some pressures that's being witnessed by smaller NBFCs, we'll deal with it in detail through a Q&A session. I will also want to believe that the recovery which was being talked post-moratorium, what would be the pressure, what would be the situation, and we would like to confirm to you that the collections have improved month over month, and you would have seen through results of various companies how the collections have been faring, and every segment of the consumer seems to be extremely positive. My last comment would be NBFCs are a very, very flexible model, and therefore over a period of time under every situation of disruption, we have found solutions and we have partnered our customers and we've come out a winner. I would invite.
Ramesh, you got muted. Please unmute.
I couldn't be heard at all.
No.
Only last sentence.
Or somebody press the button maybe. Okay. No, so I'm just saying I would also invite Srinivas Raghavan to offer his initial comments on the regulatory framework changes and overall industry growth perspective, etc. But from our side, we want to communicate that we are absolutely positive and we feel that the future of NBFC is extremely, extremely buoyant. And each one of us in this industry, looking at different segments of consumer, offering different products and solutions, feel that we would actually be a growth story when you look at us from here on. Over to you, TTS.
Thank you, Ramesh. Good afternoon, friends from the media. Just to pick up on a couple of points that Ramesh made earlier, I think on the demand side, because there's been lots of questions about demand, whether the sort of growth that we saw in Q3, was it completely pent-up demand? Is it real sustainable demand, so on and so forth? I think we are now able to say that while some of the growth was due to pent-up demand, I think real demand is coming back, especially in specific sectors, because as you all know, the budget provided a big thrust to the infrastructure sector. So clearly that is an area where we are seeing growth. On the other hand, if you see, steel is starting to do well, cement is starting to do well. So when you add all of these things together, very clearly, I think there is buoyancy, there is optimism, especially in the infrastructure sector. And that, as you know, has an automatic knock-on effect on various other sectors. So that is probably the most important thing for us going forward, right? And you all know the projections, GDP growth, people are talking about 11%, 11.5%. So that looks very positive. And if we don't, and God forbid, if there is no second wave or, a big surge in COVID numbers, which unfortunately the last few days we've seen, but hopefully we will get on top of that. And if we do, our belief is that FY22 should offer us a lot to cheer about. This is number one. Number two, of course, regulation. There's this new tiered approach for which Reserve Bank has put out a discussion paper. FIDC has responded to it, as have, I'm sure, many other stakeholders. As an industry, we've always welcomed regulation. It's not that we are scared of regulation, but I think what we've sort of pushed for over the years is for a continuous dialogue between the regulator and the industry, which happily, I think we've been able to make reasonable progress. FIDC, as Mahesh said, has been in the forefront, putting forth the views of the various industry players. Reserve Bank has engaged with us. The ministry has engaged with us. And, we have been putting forth the issues which we feel are critical, especially for the more vulnerable part of the NBFC sector, which is the smaller and medium-sized NBFCs. And, to the extent that it's possible, we have been able to get some of those things heard by the regulators. So that role will continue. Just in terms of this four-tiered approach, let's see, what the regulator comes back with. We've made suggestions on a few issues. And, once the Reserve Bank sort of firms up its ideas, hopefully we will get a chance also to interact with them if there is any follow-on that is required. So that's the other thing which I thought we should address ourselves to. Other than that, overall, I echo what Ramesh said. Generally, I think the mood is one of optimism. We do believe that the worst is behind us. And when I say worst, we really hit rock bottom last year. when businesses were literally shut down for 3 or 4 months. There was the moratorium, all of that happened. So that is behind us. We've seen a significant revival in economic activity. Our own business disbursements have been going up month after month. So there is every reason to believe, as I said, that FY22 will bring more cheer. So it's on that note that we look ahead to the coming financial year. I will stop here and hand it back to Mahesh.
Neha, you can take over now. Neha.
Yeah, thank you so much, sir. I would now like to open this session for media Q&A. And in case we'll go with systematic wise, in case anyone has a question, they can either raise their hand or unmute themselves, introduce them and the publication, and accordingly go ahead with the question.
Yeah, Vishwanath, go ahead.
Hi, sir. This is Vishwanath from Bloomberg Quint. Mr. Srinivasaraghavan was referring to certain recommendations that you have made with respect to these new guidelines for NBFCs that the RBI is talking about. Just wanted to get a sense, what exactly is it that you're looking for in this 4-tier structure? What would you consider as a good set of regulations for the sector?
KVS, you can reply to this. What representation we have made?
See, in summary, at a very high level, definitely FIDC welcomes this tiered approach because it clearly addresses the tighter regulation towards the larger entities and gives a much greater amount of freedom as far as the smaller entities are concerned in terms of regulations, right? That is at a high level. Having said that, clearly, there is a need for us to disaggregate the way things are at this moment. If you really look at it, the larger entities which form the top tier are anyway very large entities. Many of them are larger than banks, as it were. And they themselves on their own volition have set up very high standards of governance and all of that. Now, it's not going to be therefore anything really onerous in terms of additional regulations that are going to be imposed upon that. These entities do go through a very rigorous inspection by the RBI on a very regular basis. So all those things are already there in place. I would say 90% of those things are already in place. So I don't think that top tier should be very much affected by in a negative way from the regulations. But what it does is, it certainly gives a way forward for some of these entities to graduate into the position of being a bank and thereby expand their balance sheet without being constrained by liabilities position. As far as the second tier is concerned, pretty little actually changes from a regulatory perspective. They are going to be, they're all in the same state of affairs as they are today. That's how it will continue. The ones which are above 5,000 crores, for instance, to give you a simple example, the liquidity regulations that came about some time back, which requires these entities to maintain liquidity buffers of a certain amount, which is dictated by the thing. Anyway, those are all already coming into place and will take its own natural course. So the real issue that we have raised with the RBI, therefore, is as far as the smaller entities are concerned, where one of the issues that we have flagged off is that raise of the minimum equity capital requirement from 2 crores to 20 crores. We felt that it could be a very large jump, and given the time frame, it could be very difficult for some of these guys to actually get to that level. Many of these entities, we have to understand, that provide a very vital last mile connectivity to the ultimate borrower, especially where it comes down to the unserviced or underserviced kind of segments are concerned. They operate in very small markets. They have been there in business for decades together, maybe over 2 or 3 generations of promoters. So while they may not have the ability to raise capital to the extent that the regulator desires, they do perform a very significant connectivity role in the overall ecosystem, and therefore that advantage should never be lost. So what we have suggested is that while it is indeed necessary for the capital to be taken up in graduated manner, the impact of that should be spread over a longer period of time. And to draw parallel from the current existent guidelines for the housing finance companies, where the minimum ticket size of minimum capital is only at 10 crores, we have suggested that as a start, let's start with 10 crore being the net own funds requirement, and the companies which are today sitting at 2 and below 10 crores of capital should be given a sufficient time frame of 5 years and all of that to actually come up to that, because it becomes very difficult for many of them to actually shore up their equity capital from their known sources. And many of these may not be a great target market as far as the private equity and the other external investors are concerned. So we have to afford a certain amount of time for these entities to grow. If our fear is that if we are being too harsh on that, the last mile connectivity, which is very critical in terms of credit delivery, could get lost, and ultimately the smallest of the borrowers could get affected adversely. That's in some is what we have stated. In case I have missed out something, Raman.
Yeah. So I'll just quickly add one more point. See, basically one important point which we've tried to highlight is, as TTS sir and Ramesh ji also said, regulation is something which I think NBFCs have never shied off and always welcomed. However, we believe that regulation and development always go hand in hand. So what we have requested is that while it's perfect, maybe it's sense to talk about harmonizing the regulatory framework with banks, it is also equally important to look at some of the benefits which currently banks enjoy and NBFCs do not, especially in areas of taxation and recovery. So I think the suggestion here is that while we bring the harmonization in the regulations, let there also be an equivalent harmonization brought in terms of those tax and recovery related benefits. That should go as a complete package rather than not only look at the regulation. So I think this is one key factor which we've highlighted.
Thank you. Neha.
The next question is from Prabhjot. Kindly unmute yourself.
Hi, I'm Prabhjot. I'm from Business Insider India. As I'm sure you've already heard, the Supreme Court's verdict came out yesterday, and now banks will be allowed to declare accounts as NPAs if they haven't made the payments which are due. So I was just wondering, how do you see that impacting the sector, especially since you've seen a buildup in demand, but now with NPAs being with the total interest amount not being waived off, and but interest on interest is being waived off. How do you see that impacting the sector? How do you see that playing out in the coming months?
Raman, do you want to take the question?
Yeah, so I think to quickly address Prabhjot, I think, as far as especially your questions contain two parts, one relating to the NPAs. So I think this is something which anyway companies were already making provisions for. Although technically, yes, as per the Honorable Court order, we were not allowed to classify it as an NPA. But in terms of the financials, I think all of us were very much prepared and making those provisions. So I don't see any significant quantum jump or change happening to that extent. I think that is something which was very well factored in already. And to the second part, in terms of the court having waived the interest on interest, or what they call as the penal interest part, that is again, since already, you must appreciate that NBFCs are majorly into small ticket lending. So already up to 2 crore loans was something which was already waived earlier, waived in the sense because government had announced that they will foot the bill, and they came up with that concept of ex gratia payment, which all of us, gave the benefit to the borrowers, and in fact have now sought the compensation from the ministry, which is still pending. So I think that itself again will not have major impact, because as I said, the lending is more in this low ticket size. So I think a large chunk from our perspective was already covered under the previous scheme of up to 2 crores.
If it's okay, can I ask a follow-up? Because we spoke a lot about the difference in like bigger NBFCs and the smaller NBFC players. So do you see the NPA ratio maybe affecting smaller players a little more, or do you see like a difference in terms of sector-specific loans or something?
Not really, because I think as we said, in fact, the smaller NBFCs would further be into the small ticket lending. And if
Right.
you look at, majority of them are into asset-backed lending. Again, typically, if you look at a typical traditional NBFC, small NBFC would be majorly into, vehicle lending. So I think there, anyway, we don't see asset quality being a very important aspect. So I think that is not a concern, really.
Thank you so much. Thank you.
Anybody wants to substantiate? Sanjay ji or anybody?
Yeah, I'll just probably add on to what Raman mentioned. So with regard to the earlier point on the NPA recognition following the Supreme Court's order yesterday, you see, unlike banks, NBFCs as a sector has been mandated to follow the Ind AS norms, under which we have been providing for the NPAs and the write-offs based on the historical experience. So whether an asset is lying in the NPA or the asset is not lying in the NPA due to the Supreme Court order, almost all the companies have actually been making more than adequate provisioning in terms of what could be the potential hit. And second, as Raman mentioned that, in fact, all the companies have been declaring the pro forma NPAs if the impact of the Supreme Court order was not given. So therefore, I think now the practice which was followed for the previous 2 quarters owing to the Supreme Court order has now been recognized by Supreme Court, and wherein they have said that now you recognize the NPA. What actually we as a sector did, while in the accounts we recognized as to what is the NPA if the customer is not paying, but to the customer we did not follow the recovery measures in the spirit of the Supreme Court order, those who were not able to pay the installment, and also made the provisioning. So I think that is to clear the point so far as the NPA is concerned. So far as the second point on the interest on interest, compound interest, and the penal interest is concerned, there like earlier, based on the government, the Supreme Court directive, the government announced that we should give a concession by way of an ex gratia, and they appointed SBI as the nodal agency. And so we all gave the credit. And if you remember, government had mandated the entire sector that we should provide credit before Diwali, which is the second week of November, so that customers could feel happy and that could result in some kind of a spending. So all the companies worked backwards to make sure that the customers could be given credit by Diwali time. And then by 15th of December, we were mandated to file our claims with SBI being the nodal agency, which also all the companies have done. So I think in this regard also, the jury is still out whether government could actually compensate the banks as well as the NBFCs for waiving the interest on interest. Because see, we borrow money and we lend money. So if we have given moratorium to a customer and the customer hasn't paid, and in the process we have availed loan from the banking system or from the capital markets, we are anyways required to pay interest. So therefore, the one option could be that again the government may grant us some compensation on account of this. Second, the government may also say that you please absorb this. And I've seen some of the media reports where they have computed, the analyst, as to the impact of this for the entire banking system. They have estimated anywhere between 10 to 50,000 crores. So I think that jury is still out, and we will have to probably wait for a few more days.
Just one more clarification. One more clarification I may want to add is, while the accounts were not required to be categorized as NPA, etc., since over the period the sentiments have changed and recoveries have started becoming normal, some of these customers by themselves would have come out of NPA also. So it is wrong to believe on that day if they were some kind of an NPA, they would continue to remain. I would believe some of those customers, even by a natural process, would have come out of NPA by now.
Thank you, sir. I think that really helps because there has been a recovery since the lockdown has ended and the economy has started to build up.
That's right. That's right. Thank you.
Neha, next one.
Again,
yeah, we have one more question from Vishwanath again.
Yeah.
So sorry, I just wanted to confirm something that Mr. Chamre was talking about with respect to the interest on interest payments. have you made any representation to the government asking for this kind of refund, or is it something that you're waiting for them to say what they're going to do?
No, we haven't done anything right now, Viswanath, because yesterday only the Supreme Court order has come and the commentaries are out. And we also wait for as to what is the view the RBI or the government is taking. And possibly based on that, then we in our core group, which decides on the representation, will take a call and then possibly decide to make a representation. If
Would you have any idea as to what the NBFC industry would have to shell out if you would have to make the refunds?
No, I think it's too early to hazard a guess about this. But obviously, we see ourselves as the transmission agents, where we receive credit from the banking system and the capital markets, and we transmit credit to the underserved segments which are not being catered by the banking system. So we are more like a pass-through. So in the spirit of the same, like government gave the ex gratia compensation, we would expect that if government would like us to provide this to the vulnerable sections of the society. But I think it remains to be seen.
All right, sir. Thank you so much.
Thank you.
Yeah, anyone else who wants to go ahead for a question? They can just directly unmute themselves in case they don't know about the raise hand option.
Yeah, if there are no questions, I have some questions pre-received by me in writing from media. Can I put one or two questions out of that?
Yeah, sure, sir. No problem.
Friends, one of the questions is, what are the major microeconomic factors that have impacted NBFCs in the recent past, both positively and negatively? If anybody can clarify.
So, right at the beginning, me and TTS addressed this. On the positive side, we have definitely seen, the infrastructure opening up, and therefore the vehicles being better deployed, more vehicles being bought, and the cash flows of the overall contracting segment and the commercial segment definitely becoming positive. So that's a very clear positive visibility. I think on the people moment, we have seen tourism opening up, different segment, and therefore the taxi operators and the aggregators, their businesses have gone up. Very surprisingly, I was also kind of looking at how the train services have improved to different locations, and the three-wheeler, which was passenger moving three-wheelers, have also shown substantial improvement to their day-to-day revenue improvements. And coupled with the farm cash flow improvement, the tractor demand, tractor cash flows have improved, the repayments have improved. So I would think, as we speak today, there are more positives and there are not really any negatives to talk about. I think the pressures and the negatives, if any, were in the very early stages of pandemic when we were in April, May, June. I think subsequent to that, it has all been more of a positive story. And I would think NBFC believes that things are changing for good.
Thank you. The next question is specifically addressed to gold loan companies. So VP Nanda Kumarji, you can reply. What innovative strategies have NBFCs used to tide over the coronavirus crisis? As you have been saying, gold loan companies have always grown in lockdown also. How it happened and what's the status now?
Thank you. These gold loans are instant loans. When other loans were not available because of the cash flow worry, gold loan companies provided gold loans. More than 2/3 of the gold loan is provided by the unorganized sector. They have the freedom to fix the LTV. They can operate from anywhere, etc. Now, what happens is for gold loan companies alone, there is a restriction in opening branches. More than 1,000 branches, so we need to go to RBI and take permission. To reach out to these poor people, we need to expand our branch network. Now it is restricted. And other thing, when banks are allowed to lend up to 90% LTV, we are restricted up to 75%. So the level playing field here is lost with unorganized sector on the one side and the banks on the other side. The regulation should look into these, because India is a place where the family gold is there to the tune of some 25,000 tons, which is valued around 1.75 trillion US dollars. When that is there, the people, particularly from the lower middle class, can monetize this easily through loans. So so RBI should definitely look at facilitating this and also shift from the unorganized sector to organized sector. And the strategy during this lockdown period was digitalization. Through digitalization, our customers were able to avail the loan and service the loan without any difficulty during lockdown days.
Thank you. Neha, anybody is there, or should I continue with my questions?
I think we can continue with your questions, sir. We have I don't see any raised hands as of now. I'll alert you in case I do.
Yeah, Umeshji, in the morning, this question is for you. In the morning, I saw in one of the channels that you were saying commercial vehicles have once again started doing well. Now with Corona 2.0 looming large, maybe probability of that, plus night curfews coming in, do you think this movement of goods and services will not be affected?
Yeah, I did mention in the morning what I have seen in the last 15 days when every state in the large cities, they were imposing night curfew or some kind of a lockdown in certain pockets, districts. What they have done is they have not restricted movement on the commercial vehicle anywhere. Not only commercial vehicle, even in the personal vehicle movement, they are not restricted. Even there are some restriction between interstate for passenger transportation, but absolutely no restriction. And one positive thing is the consumption is actually increasing, even though the expectation is that as the COVID virus spread increases, the people consumption due to various factors like marriages or other function events, that is likely to come down, but we have not witnessed that kind of a slowdown in the consumption. And that makes the movement of the goods much smoother and demand continues to increase. The other factor which is very important here is the supply chain which was broken in the past because of the strict lockdown. It got opened in the last couple of months and it is continuously getting opened and becoming better and better. So nowhere we are seeing the supply chain getting broken anywhere. So there are a lot of pressure from the manufacturers that the raw materials should move faster. Input costs are going up. Logistics cost has to be controlled. So there has been a lot of attention towards logistic movement. Therefore, the speedier movement and the bigger demand is contributing to the increased demand for commercial vehicles. So I feel the commercial vehicle sector is in the upwards movement. Even earlier, if you look at the demand was basically for LCVs and ICVs. Now it is moved to heavy because heavy initial demand was for construction related activities. Now it is coming to haulage. So that is where I think the pickup will start. And if the agri output which is coming in April and May is robust, there will be a lot of pressure on demand for more number of wheels, and that will continue to create a bigger demand even in the semi-urban rural market, adding with urban market.
You expect a normal monsoon?
Yes, I'm not weather prediction, but see, there are two things which people say. There is a warm climate prevailing in certain pockets of India, which may delay the monsoon in the eastern part, is what they say. But in the western part, it is a cooler atmosphere, so they say that monsoon can be advanced. But a mix of both, if it is better than last year, then we are all lucky and happy.
Thank you. Yes, Neha, anybody or friends, this is the question for the liability side. We have not touched it so far. What is the aspect of cost and ease of funds for NBFCs? Considering that NBFCs raise funds from other sources, has the rising of or ease of raising the funds been there for NBFCs? Has the cost of funds increased or decreased in these times? Anybody?
I think the availability definitely has been pretty good, and the cost of funds have actually come down over a period of time. It is now stabilizing. We don't believe that going forward we are going to see any much decrease to the cost of funds. And as the government starts to spend, the liquidity would get consumed better, etc. One should be a little more ready in a year's time or so that the interest may start slowly looking up. But in the last 3 quarters, we have seen decrease in the interest rates, and I think all NBFCs would have been benefited by it for sure.
Yeah, adding to that, my view is that every year in the month of March and beginning of the April, you do see some squeeze and liquidity supply being less and yield going up. If I followed for last 3 years, that is the trend. So I think as we move into April, the yield may come down to some extent, and therefore it may ease further.
If I could add a few things here. Now, if you look at it over the past 3 or 4 quarters, the government has also announced a slew of efforts to aid flow of funding to the NBFC sectors, whether it is the TLTRO or whether it is the partial credit guarantee, the securitization, whatever measures they have taken has resulted in substantial flow of funds more to the smaller segment, smaller NBFCs segment. The larger ones never had a problem in any case, but even for the smaller ones, the government has made a lot of effort to ensure that funding is made available. Yes, individual companies would have gained or lost based upon the merits, but I think overall from a regulatory perspective or from the government perspective, there has been significant amount of efforts to pump in more funds into the NBFC sector. I think the message that FIDC draws from all these efforts is not just the fact that fund flow is being sought to be improved, but the bigger message is the government sees the NBFC sector as a much more important player today than what it was perceived to be a few years earlier. And the fact that NBFCs play a very significant role in channelizing the funding to the last mile, which so richly deserves it, that has been recognized in a very formal and a very emphatic way. I think that's the bigger message I would like to leave with.
I think let me just extend this, because not only Government of India, we have seen some very important observations coming from apex world bodies like the World Bank and IMF, talking about the important role of NBFCs in the Indian economy. And that is where we saw even the World Bank recently, when they announced $750 million US aid to Indian government for MSMEs, one of the 3 pillars identified for MSME development was financing through NBFCs. So it goes up to that level. I think this has really brought to fore the focus, the important role NBFCs which are playing. So I think this is very, very important development.
Friends, any other question from your side? Or I'll ask the next question. Ramesh, this question, of course, people talked about ILFS and Diwan housing, and we have always maintained that these were not the typical NBFCs which we all represent. But still the question is, do you see any institutional defaults in the NBFC sector coming year?
I think, if you historically see the regular organized NBFCs, which have a very clear focus on what they want to do and they are expected to do, have never defaulted, forget, going bust. But if you by and large look at it, the NBFCs have not even defaulted the repayment of liability to any of the entities, including the banks or anyone else. So, you will find some burst happening in that industry, and you will invariably find they are not players who are genuinely an NBFC kind of an operating player, but they have been into various activities which are not typically to be executed by NBFCs of a type. So, they are all very unique in nature and different in nature. So if you historically look at for last 50, 60 years, NBFC as an industry which had very focused retail lending, commercial vehicle lending or any other vehicle lending or small ticket loan lending, right? While the pressure is taken by all the NBFCs for someone going bust, but the default has never been from regularly operating NBFCs who have chosen models to serve the last mile consumer. So my take would be that you would not see any, not just immediate future, but forever, you would not see bursts from these kind of NBFCs. I am not in any position to predict who and who else, but I know for a fact that NBFCs which are in absolute retail, direct customer connect and last mile connect NBFC, whether small, medium, big, you would find them doing their job very diligently and serving the needs of the consumer extremely well.
Thank you. TTS sir, if you'd like to extend this, and particularly if you can mention what 3 advices Mr. Santanam gave you when you joined Sundaram Finance Limited. I know I'm talking 40 years back still.
No, I think this is something all of us who have been in this business for a long time, we know. But they're more or less the ABCs, if you like, of this business. So the first thing is, this is a simple business. So there is no need to unnecessarily complicate it. Like Ramesh mentioned, some of the names of people who bit the dust, they strayed away from the core business of borrowing and lending. They tried to make it more fancy, more complicated, and then of course got it. So rule number 1 is keep it simple. Rule number 2 is don't be greedy, right? And I think that goes with the fact that ultimately all of us are custodians of public money, right? We are not doing business with our Bap Dada's money. We are all in one way, shape or form custodians of public trust, public money. Therefore, that enjoins upon us a responsibility to act prudently, not be greedy. So that's number 2. And number 3 is, grow at a pace which you can digest. I think one of the unfortunate things in the modern day is, this chasing top line growth. So the people have made a big thing about, have you grown 30% YOY and stuff like that. And usually, there may be some people who can manage that 30% YOY, but for the majority, I think that is difficult to sustain. So I think it is important for each one of us to realize, what is the pace of growth that we can manage, what is the liability support we have to manage that growth, and what are the systems and processes we have to collect all the money. Because in this business, giving away money is very easy. The tough job is getting it back. Therefore, the third canon is only grow to the extent that you can manage, or only bite as much as you can chew. So these are what I would call the ABCs of this business. And, all my colleagues here, I'm sure will agree. I mean, this is what all of us have done for all the years that we have been in this business. So those are the simple tenets, if you like.
We have a question from Falaknath Said, sir. Falak, you can proceed. And after that, we have a question from Shayan as well.
Oh, hello, am I audible?
Yes.
Yeah.
So this yesterday's Supreme Court judgment, they lifted the temporary freeze on letting the lenders classify accounts as NPAs. So what would be, how much will bad loans rise for the NBFC sector, and also what could be the outgo because of that reimbursement on interest for loans outstanding during the moratorium period? One is how much will the bad loans rise, and what could be the outgo on reimbursement? And assuming someone mentioned that if the government reimburses us, if the government does not, then what impact it can have on the sector?
So, Falak, I'm surprised you heard the third part that we are looking for government may support and you missed the answer to the first two questions. They were said at the same time. So, so we don't expect that the NPS would raise substantially, and people have made sufficient provisions for it, right from a small company to a large company. So it's not likely to impact P&Ls because NPS have been provided for at least as a provision. And two is, as the market conditions have improved, some of these customers, even on a natural course, would have started to earn and would have started repaying. And therefore, we don't see that to be any major item of impact so far as we're concerned. So far as the interest part is concerned, again, it was explained right at the beginning that, you know, it's for 2 crore and above loan, and NBFCs typically that we are talking of are all in vehicle loans and kind of thing. And therefore, the size of the loans would not breach that kind of a number, and therefore the impact on interest would be pretty minimal. And the third question that you asked on, are we looking for support from government? Of course, you know, if we have to give up something, we do expect somebody else would support us, but it's too premature to say what would that be, what's the size of that would be, because we've all read along with you the Supreme Court judgment. And maybe it'll all have to have some more time to be given to us to realize, and it may not be industry-wide possibility, company-wise, each one will take out a detail. But we do believe that there would be a support that would come towards an NBFC if we will have to give up something.
I see. If it doesn't come, then
we will have one more conference to explain to you. It's too premature, right? How do we say that now, right? So, but for NBFCs of the types that we are talking here, we would expect that it would be very, very minimal because not too many loans are about 2 crores and things like that.
Okay. Thank you.
Yeah, Shan, you can proceed with your question in case you're done with your call. Okay, yeah, he's done.
Hi, sir.
Hi.
I wanted to check.
Yes, Shan.
Sir, I wanted to check, you know, did you say that NBFCs are still, I mean, are yet to receive the reimbursement of the first round of waiver?
Yes, I think all of us have applied for, and we have yet to kind of get it back.
And I think, Shane, that is true for everybody, for banks also. See, because that was an ex gratia kind of, the way it was structured, government termed it as an ex gratia payment, which whether anybody availed moratorium or not, irrespective, across the board, all the borrowers were given. And now we filed our claims, as Mr. Chambari also explained, through the SBI, which was the nodal agency. And all the claims are lying with the government now. So I think we haven't heard anybody yet being reimbursed. I think they're processing. It's going to take some time. And things will happen maybe later.
It is everything is routed through SBI caps, so yeah, they are the nodal agency. They are taking care
of it. So just to follow that up, what was the quantum of loans that the NBFC sector wanted to be reimbursed?
Sorry, what was the question? Missed you.
So what was the quantum of loan that the NBFC sector wanted reimbursed in the first round?
Oh God, I don't think that number would be there with us. Each one will have their number. As a sector, I'm not sure whether that number is readily available as to what is the cumulative claim that all of us have launched. Maybe if we lay our hands to, I think you should reach out to SBI caps or somebody who's the nodal agency. Maybe they will have a consolidated number. I'm afraid we as an industry may not know that.
Yeah, that's the best way.
See, because that time, if you remember, government had themselves made an estimate that in all they expected somewhere around 6,500 crores was the total quantum which they calculated. So I think that was, of course, including banks and NBFCs. So there is, as Rameshji said, I think SB caps perhaps would have a better answer to that in terms of the split between how much is it exactly for banks and for NBFCs.
Yes, friend, any further question? Or I have one question left with me, if you permit, Neha.
Yes, sir, you can proceed.
Yeah, this is, I'll say, the magma specific, of course. I mean, from the perspective of individual investor, does it make sense to look at or avoid NBFC stocks? What is the scenario about the equity interest generated in the NBFC sector, and what do you see the future?
So since you are referring to me, I'll try and attempt the answer to this. So far as the investments in the sector is concerned, being in the sector for 32 years, I've seen that there are always, price points at which there are interest for the investment in the sector. And because the M&As happen in good times and M&As happen in the difficult times. It is always the quality of the company, the quality of book and the management which would attract the investor interest. And then they always would take a 5-year or a 10-year view when there is a strategic investment that happens in the sector. You never take those calls based on 1 year or a 2-year event. So I think from that point of view, and if we look at starting from September 2018, when we faced the liquidity crisis down to the COVID situation, in which NBFC is largely dealing with the vulnerable sectors of the society were deemed to be facing much more difficult times. And then the kind of, the interest that has been generated in the sector and the market. And so therefore, what we are finding that there are investors who are able to pick and choose the companies which have sound fundamentals in terms of customer value prop, in terms of the management, in terms of the governance, and the regulatory perception of the entity. I think these are all the 3 or 4 factors which really count, which also, like banks, they say that they use the CAMELS rating to assess the creditworthiness of a borrower. So I think from that standpoint, it is always, a good time if someone is looking to invite the investor interest and if the business demand is such that you need growth capital. And it's a question of, then the appetite of the investor and the company wanting to raise money.
Thank you, Mr. Chamari. Any further question?
I think, Mahesh, I'd just like to add, I have not seen NBFCs not able to grow due to non-availability of capital, at least in the last 25 years. I think any NBFC wanted to raise capital, and if they had a growth strategy, I think they have been able to attract investor and have been able to raise capital. That's been my experience in the industry for the last 30 years that I've watched it closely. That's my understanding.
Yeah, if there are no further questions, I can ask Mr. Sanjay Chamaria to sum up and propose a vote of thanks.
Yes, sir. Yes, sir.
Sorry, if I may, this is Ritu from CNBC. Sorry to go back to the Supreme Court.
Yeah, please proceed, Ritu.
Yeah, sorry. To go back to the Supreme Court question, do you have a sense of how much additional provisioning you'd have to make because of the NPAs that you declare? I know you said that NBFCs have more or less largely provided, but how much more would have to be done in March? Thank you.
See, if I may take this question, since I was responding earlier, I mentioned that because of the application of Ind AS, each of the entities like ourselves, we have to do an estimation of the expected credit losses and make the provision accordingly in our books of accounts. And therefore, the provisions have been made sufficiently by all the entities looking at their overall loan book. And second, I also shared that while Supreme Court put an embargo on the NPA accounts and put a standstill, but from a good governance sake, the entire industry and banking included started reporting the pro forma numbers, and therefore to give a true picture of what is the situation of the NPAs. And therefore, if you look at the PCR or the ECL percentage, because ECL percentage is in the standard asset and PCR is in the NPA, that has actually been maintained at a very steady and healthy level. In fact, on top of that, under the Institute of Chartered Accountant guidelines, which were issued just on the onset of COVID, a lot of companies are carrying. In fact, everybody is carrying the COVID provisions also, which they will carry till the Q4 and then take their calls as to whether they want to carry over in the next year. So I would say that it would be fair to assume that all the companies are adequately provided, and therefore the Supreme Court lifting of embargo on the NPA treatment should not have any impact on the provisioning requirement per se in the quarter four.
Yeah, if I can just add to what Sanjay said, I mean, NBFCs have actually moved beyond the nomenclature of NPA. Because of Ind AS, we recognize everything as stage 3, where it is 90 days and beyond. So while we have not reported NPAs because of the Supreme Court ruling, our stage 3 as per Ind AS is already out there. So we are completely, provisioned for stage 3 assets as is required, under the Ind AS requirement.
Thank you.
Yeah, Ritu, you should be guided by that. Actually, all of us have, not called them an NPA, but have made provision as though they were to be. So therefore, the accounting pressure should be 0, while they would now be categorized as an NPA if some of them are moved out there.
Thank you. Neha, anybody else is there, or we can conclude?
No, we can proceed with the vote of thanks, sir.
Sanjay ji.
Yeah, thanks, Mahesh. Well, friends, it has been a good, a terrific experience that the entire board of FIDC, and I can feel that members are there from all over the country, north, south, west, and so many people from the media. It has been so convenient to have an interaction with all of you. We are very thankful for over the last 1 year, in fact, ever with the onset of COVID, the kind of work which FIDC as the representative body of the asset financing and the loan companies have been doing with the regulator, and the media support has been outstanding, to say the least. The kind of coverage on the representations and airing our views on every single policy guidelines which have been issued either by the finance ministry or by the regulators or by the judicial authorities. I think we have got a fair share, and this has allowed us to voice the opinion and the issues of our members to the powers that be. And this has also resulted in a lot of appreciation by the members, several hundred of them operating from every nook and corner of the country, who are operating in tier 3 to tier 6 towns. So we are very grateful to all of you. And what we discussed in our March board meeting, that going forward, we would like to have a structured interaction with the media to, while on an issue based, we will have an interaction as and when it arises, but on a structured basis, once in a quarter or once in a year, a half year, we will have an interaction digitally, so that it becomes very convenient, and wherein you all have a visibility on the board members and the core group, and all the industry related issues and questions. We can share our views with you, and you are free to ask any questions to any one of us. So with that, I thank you very much for having taken time out this afternoon and have an interaction with us, and stay safe, and look forward to having this interaction again in future. Thank you very much.
Thank you. Thank you.
Thank you, everyone. Thank you, the spokesperson
you.
and all the journalists. Thank you, Metabel and Dinah. Thank you.
Thank you, everybody. Thanks a lot.
Thank you, Neha. Thanks for coordinating the whole affair. Thanks
No
to
problem, sir.
Thank you. Thank you, friends. Take care. Bye.
Thank you.